Amrish, hi, afternoon.
Thank you
What's
so
your
much.
prediction about IT? Does it seem like they could finally turn around the fortunes this quarter? Markets seem to be believing, or at least giving them that benefit of doubt.
No, I believe it would be again a muted quarter for most of the IT companies. And if you're talking of the medium term, I think the issue of H-1B visa will actually play out in the medium term more than the short term. So if you're talking the next couple of quarters, I think, I mean, I would be a bit cautious as far as the IT space is concerned. But if you're talking of longer term, we need to see as to how most of them reinvent themselves around H-1B visa issue as well as AI. I think that's the other big issue which is staring at the IT companies. So we need to see as to how both these would play out. I mean, going ahead, and as to how these companies again reinvent themselves, like I said. So we need to keep a close watch on that, and those are the companies I think should be on your buy list than like going out right now and buying with the hope that things will turn out better.
Right, okay. Kunal, the charts still convincing on the IT trade?
Yeah, I think few large cap names, yes. I think TCS, Infosys, something is where I would probably have a higher skew. Of course, the results could be something which could be a bit of a surprise for the stock price. But you know, the intent in which the traders are taking positions over here. So there was a 30% jump in the open interest for Infosys, I think at this 1400, 1420 range for the stock. And from there, the stock has climbed up 70, 75 points. So, and I think we've seen mild bit of traces coming out for the mid-cap IT names, or you know, the tier 2 large-cap names. TechM, HCL Tech, I think, had also seen some bit of built-up in terms of open interest. TCS has climbed up 100, 120 points from the recent lows around 2900 levels to now 3000 plus mark. So large-cap IT stocks is where I would keep an eye on. And if this results, and if assuming post-results, we see the breakout happening further for these large-cap IT stocks, then I think the second leg of our trend should be on the mid-cap IT names, where you may expect the likes of OFSS, Persistent, etc., which you could find the second level of breakout.
But let's welcome on board Nagaraj Shetty as well to talk about the technicals. We've got Kunal, of course, also, and Amrish. But Nagaraj, hi, afternoon. What's the trade on the Nifty given the weakness today?
Hi, good afternoon. Nifty has been in a consolidation phase, hit the resistance around 25,200 levels. After having moved up sharply from the lower levels, I think market is showing smaller downward correction. 25,000, 24,900 is going to be the support for the market. I'm expecting Nifty to bounce back after forming a higher bottom, and it eventually could reach towards the 25,200 in the near term.
Okay. You know, the other one in focus has been an Ajmera Realty. What a strong set of numbers that they've come out with. You know, when I'm looking at H1, it's slightly stronger than what they ought to be halfway given the FY26 guidance. But what they've done is we've spoken with the management, and let me cut across to that conversation we've had, because they've upped their guidance on that count.
Total, we'll be doing about 8 to 9 project launches. We have done so far 2 project launches. We have another 6 more to go, and we are very confident with the kind of project launch pipeline what we have. We will definitely surpass the guidance. We are keeping our fingers crossed that the momentum of the sales continue with every launch what we have planned, and that is where we will see a good run coming from the other project launches as well. I don't see any challenge happening in sales, and we will continue to see this momentum moving forward. I'm very confident that the launch what we've done, we've almost sold about 40% or 30% of our inventory in the last 10 to 12 days. And we are very confident by the time we finish within a year, we'll be almost surpassing 50% plus or even more. So, I'm hoping that this trend continues. And the buyer sentiments is still positive with all this overall liquidity with GST rate cuts coming in. We are hoping, and with the repo rate also being stagnant, we feel that liquidity will play a great role in the market.
Okay, Ajmera, let me come first to Kunal, because we spoke about Ajmera this morning, Kunal, and the stock was up 5% yesterday. They've done. They're putting out a QIP, and that was supposed to be at a 5% discount to day before yesterday's close. Now, when you're looking at how the stock is shaping up, of course, it's corrected from the highs of yesterday. What's the sense like now on charts?
So I think it's been an okay chart for Ajmera. When you look at this over the last 4 to 5 years, I think the stock moving from triple digits, 100, 150 to now 1000 plus levels. Even in the recent past, the last 2 months of the price patterns, it's been a more of a stable chart, recovering quite well in every phase of the market correction. At 1020-25, I would look at this trend to just about continue for the stock. Supports for with the stock of the very near term is closer to 950 mark.
Okay, that's the word coming in on Ajmera Realty, reacting to them posting the highest ever quarterly sales in the second quarter. But Amrish, do you think, while year to date you've not seen much of a performance from Realty, and especially off late, Realty seems to be taking a back seat. Do you think Realty can make a comeback, as was the case during its heydays in the past peaks?
No, making a huge comeback could be a bit difficult because we are clearly seeing inventory buildup happening. I mean, the segments which can continue doing well in reality is affordable housing. And in a place like Mumbai, I would say anything below about 1.5 crore, 2 crores would be called affordable housing. And again, beyond that, the premium housing. Again, in a place like Mumbai, it would be anything between 12, 15 crores plus. But then the ones which fall between 3 to 4 crores and 10 crores, I think that is where there is a bit of an issue. A lot of inventory has built up, and the demand seems to be a bit slack. So we need to see as to which are the companies, which are the listed entities which have more portfolio in extremely premium as well as affordable. I think these are the segments to be looked at.
And while we're talking real estate, Kunal, you did mention that Anantraj could well be an opportunity which one could explore as a buy on dips. We've seen that dip come through today.
So yeah, it's down 5% so far, 4.5%. I would still believe that maybe some more room of the stock heading towards a downward side, breaking the 700 levels. The 50 DMA for the stock, I think, is closer to 650 mark or just slightly below the 650 levels. I'm not sure whether an actual retest to the 50 DMA could probably happen, but I think closer you are towards the 650 mark, so closer to 670, 675, that could actually be a good buying territory for Anantraj.
Okay, and Amrish, what does this mean for real estate as a pack, right? Ajmera posting strong numbers, giving a strong outlook, obviously presence in Mumbai as one of the markets, but outside of that, you also have Bengaluru as another key market that Ajmera operates out of.
Right.
What's the sense like? Are there other players which could also be beneficiaries of the kind of tailwind that Ajmera is seeing?
No, I mean, see, if you're talking of Mumbai, I
Yeah.
think you should be looking at the realty players who have decent number of projects in Navi Mumbai, because today is a big day for Navi Mumbai because of the airport inauguration, and that should be operational by December. And we have seen in the past globally also as and when you have these large airports opening up, the area around that airport really develops. So I think the big story is going to be, as far as like real estate is concerned, would be Navi Mumbai. Exactly what we had seen happening in Bengaluru in the last 2 decades. I think we should see that happening in Navi Mumbai. And if we're talking of Bengaluru right now, I think because of IT, we could see some amount of slowdown as far as the real estate is concerned in places like Bengaluru and Pune.
Okay, that's the word coming in on what the Realty Pack may be up to. Today, of course, it's really about some of the pressure in those, ultra HNI names like a Keynes, for instance, although Keynes has definitely come off from its all-time peak. Some of the realty names, real estate like we just flagged off, they are the ones which are coming off quite a fair bit. And so are autos. Kunal, let's revisit M&M Tata Motors, the weakness today, and of course, the one that you're betting big on, Maruti, which has also fallen today.
Yeah, so I think it's a shuffle which is happening for the auto pack, because you had earlier leaders like Tata Motors and M&M, but now the leaders have changed. So you are looking at Eicher Motors as the new leader of sorts in terms of price performer from the two-wheeler pack. You have Maruti, which has done reasonably well. And then the erstwhile leaders, the likes of Bajaj Auto, Hero MotoCorp, these stocks have relatively fallen from their 2024 as well as their all-time high levels. So I think in that sense, there would be maybe a scope where these churn or the the shift which is happening from the previous leaders to this leaders could probably be taking on for the next couple of weeks. But I strongly believe that the rally or the trend which started off for the auto stocks in the month of July, August, I think that rally should continue for the entire sector over the next many quarters. And my sense is that the likes of Maruti, Hero MotoCorp, Eicher Motors, I think they could be good buy on dips, especially on decent sized corrections for themselves with respect to the other peers like M&M or Tata Motors, etc.
Well, the other one which is at play is Dreamfolks, and we've gone ahead and we've spoken with the management. They've announced diversification plans. The chairman managing director says that they see opportunity for growth in an under-penetrated Indian market. Listening to what she had to say.
It's a very under-penetrated market. Okay, there are customers who are not having, the credit cards or such kind of benefits from the banks. Now, these are those customers who can actually, take our membership and use these. So I would say that in a country like ours where the penetration of a credit card is so low, I think, such kind of membership which customers are looking at, it's a great opportunity for people to actually go for it. There are large banks, I would say, and there are some fintech players. Presently, I can't name them because you would actually be seeing some launches happening very soon in this Global FinTech Fest itself. And there are few which are going to be launched very soon.
Right. Okay, that's the word coming in from the Dreamfolks management. In the meantime, just looking at the gaining end, while IT, of course, is holding out well, the healthcare names also continue their up move. So a Max Healthcare, for instance, is higher by another 1.5%. There's, of course, Bharti, which is also standing tall. And then Bajaj Finance as well is looking good, along with Eternal, which is also higher by 1%. But Nagraj, that really brings me to the flavor in the markets of late. That's metals. What's looking like a good trade still?
Yeah, however, metal have showed a fantastic rally from the lower levels, and we have seen though they have placed at the higher levels, still there is no indication of any reversal building up. I have a metal stock in a pick that National Aluminium. National Aluminium, after a reasonable downward correction last 5-6 sessions, we have seen some excellent up move from the low higher bottom and currently placed around 223, 224 levels. Though placed at the higher levels, still the overall chart pattern is looking positive. I think more upside could be there in the National Aluminium.
What kind of an upside are we talking about?
Yeah, I'm expecting around 238 initial target could be, and one can place a stop loss of 215.
Right. Okay. So that one on our list. Kunal, Yatharth Hospital up 10%. Do you have a view?
Yeah, so I think yesterday there was Indraprastha Medico. I think that was a stock which had moved up higher by 20%. Today it's Yatharth Hospital. So I think more or less, I think the entire hospital space which has been doing very well. 2 days back or 3 days back, it was Fortis Healthcare which has done 8% kind of a move. So I'm sensing that it could be more of rotation which could be happening within the hospital space. But I think it's been an excellent chart for I think many of the stocks, Fortis, Apollo Hospital, Yatharth also in the last I think 3 or 6 months, where the stock has recovered from sub 400 levels to now 800 plus mark. It's been a consistent, steady price uptrend for the stock. So I think it's about the trend being continuing for these names. The best way to try and navigate into these stocks is to use those marginal or mean retracement points, especially the 50 DMA in this case, as a good point where traders could look at an average.
Ambrish, do you like any hospitality related stocks? Are those also on your radar? We'll have a very strong festive season likely in terms of consumption. Is that one way in which you will play it? And if so, what are the names that you like?
Absolutely. I mean, the way the ARRs have been moving up, the way the occupancy have improved. And clearly, I mean, Indians are traveling, whether it's for business or for leisure. And in the last 3-4 years, we have seen extremely good movement in these stocks. But I still see some more upside when it comes to stocks like ITC Hotels, Lemon Tree, as well as Sami Hotels. And if you're talking of the larger ones, I'm talking of Indian hotels. I think these are the 4 stocks which should be there in the portfolio if one wants to play the tourism sector.
And Nagaraj, if I can come to you with regard to a couple of those travel stocks, at least the ones that are buzzing today, and Ixigo is down 6.5%. Now, I'd reckon that some part of that is also because of the run-up in the stock price. But give us a sense of how you're seeing this one on charts. Also, the other one is RateGain Travels. That one also correcting 4% today.
Ixigo, we have seen some sharp momentum, and there is a strong resistance around 320 level, odd levels. I've seen some good reaction on the downside. The near-term trend remains intact. There may be some more consolidation, some more weakness. Around 275 is going to be the support, and we could see some buying emerging from the lower levels.
Right. Well, it's actually the jewelry pack which is also looking very smart, irrespective of gold being at all-time highs. I don't think that's really impacting the festive cheer, if you will. Look at PN Gadgil, for instance. The retail segment has recorded a very robust 29% growth in the second quarter. The gold category registered a 24% increase in value and 15% increase in volume. Even the non-retail segment, the e-commerce faction, that's seen also a surge, and franchisee operations also have surged for them by a good 105% year on year. Or for that matter, look at Titan's quarterly update as well. As impressive as it could have been, clearly the way that Tanishq has performed doesn't seem like gold prices at least are impacting their demands for sure. And both these names are on a tear in an otherwise weak market. Titan still holding up and latching on to those 4.5% gains. And then, of course, you've got PN Gadgil as well, which is also looking very, very strong indeed. Ambrish, what's the best way to play the gold surge? Would you continue to be bullish on some of the jewelers, or would you say the gold financiers are the go-to bet?
I think gold finances would be a better bet because when you talk of the jewelry companies, I think whatever, like increase in revenue or increase in profits, whatever we'll see, would be more of inventory gains than anything else. Because if you talk to them individually, everyone is talking of the demand not being as high as they have seen in the past festive seasons. So I think that's what is going to be an issue going ahead if the gold prices remain at the levels where they are. Unless, of course, we see another, 30-40% more increase, then possibly they'll have more inventory gains going ahead. So at these levels, surely I'll not look at the jewelry stocks to invest in. But then I think one can play this story via the gold finance companies.